UnitedHealth just reported earnings. The stock is down 20% on the open. Absolutely crazy. It can't catch a break. Anytime it's green, the stock goes down. Even anytime I talk about it, you guys tell me in the comments that anytime I do a video on the stock, it goes down. And I'm sorry, I don't mean to, but it's down another 20%. Now, in terms of the earnings report, it's really not bad at all. They did beat on earnings per share. 211 versus 210 expected. They did slightly miss on revenues, nothing too crazy, a slight miss in general. Their medical loss ratio has improved, slightly improved, I should say, to 88.8% versus 89.1% from the prior year. But in terms of the guidance, it was absolutely terrible. They are guiding 2026 revenue to decline 2% year over year, and this is the first time in a decade that UnitedHealth Group has had a declining revenue. Now that sounds really bad on the surface, but it's worth understanding why the company is guiding for a 2% decline in revenues. The first reason is they had to sell out a lot of their operations in the UK and in South America as the company is focusing on their United States operation and it's much more profitable for them. So they had to exit those markets and it's gonna wait on the revenues. The second reason for the decline is they are exiting a lot of unprofitable markets. There are certain markets for UnitedHealth where the loss ratio is way beyond what the company can charge for a premium, so they're going to have to exit those markets. And they estimate the impact to be about 3 million members in 2026 as the company is focused on margin expansion and is focused on profitable growth instead of revenue growth. For example, the company is guiding a decline of 2% in revenue growth, but is guiding an increase of 8.6% in earnings per share for 2026. So we could start seeing the margin improvement, and the company is focused on margins, on profitability, and that's much better than a company that's focusing on revenue growth and that's losing money left and right. Now, in terms of another reason why it's going down, and this is a big one, is that 2026 is the final year of the transition to Medicare's new coding system, and that will translate to a $6 billion revenue hit for UnitedHealthcare. And all those things are coming all at once in 2026, and you might believe that 2027 will likely be a better year. And it might not be a better year, unfortunately, because based on the latest CMS proposal, it's not a final decision, it's a proposal, the average payment increase is going to be 0.09%, so pretty much flat for Medicare Advantage plans for 2027. The analysts, they were expecting 4 to 6%. Now it's going to be pretty much flat. And that could be bad for UnitedHealth, as UnitedHealth is going to have to raise the premiums even more to try to make up for whatever they would have collected from the government for the CMS rate increases, which is maybe not going to happen. But it's worth mentioning that this is still a proposal. The final plan and the final statement is going to be made in April. And the company is working with them to try to, you could say, convince them or to try to negotiate with them something much more than 0.09%. And they said the advance notice published yesterday simply doesn't reflect the reality of medical utilization and cost trends. We will continue to work with CMS to ensure an appropriate final growth rate calculation to avoid a profoundly negative impact on senior benefits and access to care. So again, the stock is going down 20% based on the worst case scenario, which is 0%. From now till April, it could end up being 2 or 3%. So there's a lot of upside to investors' expectations as it's based on the worst case scenario. Now, in terms of earnings per share guidance, it's greater than 17.75 or at least 8.6%. And you could see the wording here, at least. So this is, again, the worst case scenario. It could end up being much more than 8.6%. And the stock is going down based on the pretty much the worst expectations. It's based on 0% from CMS. It's based on 8.6% earnings per share. It could end up being 10, 11%. So I still believe there's a lot of room to surprise investors. And there's still a lot of catalysts to the upside. And the stock is pretty much pricing in the worst case scenario. And the company could be restarting starting their buyback program finally in the second half of 2026 as they got their debt ratio back in control. And they said, we expect to return to our historical capital deployment practices in the second half of the year, which is mainly keeping the dividend, do some buybacks, and potential mergers and acquisitions. And a buyback program, it could be really good for a lot of investors. It could boost confidence. And a lot of those companies, they tend to bottom on a buyback program. Now, in terms of the multiple, UNH right now is trading at 16 times earnings. 16 times earnings is undervalued, guys. On a historical basis for UnitedHealth, it used to trade at 20, 21, 23, 25 times earnings. 16 times is not bad at all, especially if they can return to their long-term earnings per share growth of 12, 13, 14, 15%. 16 times earnings will likely look like a bargain, but you're also getting paid while you wait for the company to play out, which is about a 3% dividend, and the 3% dividend is well covered as the free cash flow yield is about 5%. So you get paid while you wait, you have the potential of earnings per share growth to surprise to the upside, and you have the potential of a multiple expansion from 16 times back to 20, 21, 22 times, where the company was trading at a few weeks ago and where the company normally tends to trade at. And I believe the stock has kind of priced in the worst case scenario from the 20% decline. It has priced in 0% CMS. It has priced in at least 8% growth in earnings per share. It could be much, much better, and it just could really surprise to the upside. So I still believe the setup on UNH here looks good. I still believe the stock's undervalued. I personally have a call spread into June of 2027. It's down a lot today, but I still have a year and a half, and I'm just holding on it. I'm going to hold it till the end of the year. And if the stock goes down to maybe 250 or something crazy where Warren Buffett bought the stock, maybe then I'll buy some shares and then I could hold the dividend and just wait on it. But I like the company. I think it's undervalued. And that's my opinion on UnitedHealth. It was not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.